Welcome back to the channel, guys. Click like, subscribe to the channel for more content. Okay, now that we ended the Amazon series, if you want to go back and look at the Amazon series and show you how to set up and sell on Amazon, we have that in our video section in our playlist section. Now, I know you heard a lot of things about whether it's uh, trading stocks on Robinhood and some of these other platforms, and a trading term called Forex. And you kind of want to know what's the difference, what's the best one to go with. So we're going to try them both. Right now, we're going to actually do Forex. I'm going to go take you through everything that you need to know through Forex. So it's going to be a series of 20 videos plus live trading and live training. Okay, then we're going to move to the stocks, option stocks, penny stocks, different things like that. So it's going to take completely the rest of the year to do these videos. Okay, so what is Forex versus stock? Okay, stock is company shares, and Forex is exchanging of countries' cash. So every hour on the hour, every minute on the minute, someone is trading currency at the moment. It could be trading right now. It's trading right now as we speak. So every time you go to a different currency or currency or a different country, the currency moves up and down against different currency pairs. Okay. And what's the difference of liquidity is depending on the company and the market. So the stock goes up and down, and it depends on a company per day, per analyst, per evaluation period. In Forex, there's always an evaluation period. It's always moving up and down. There's liquidity is real high, so a lot of people always using money. Not everybody has stocks, but everybody has some form of cash or money system that they're using right now. Uh, so it can be very volatile. It can go up and down in the Forex market versus stocks, where it can be, you can have stocks going, and that's why they call it a bull and bear market. You can have a very bull market at some point for years, and then you can have a bear market for years. But in Forex, there is high liquidity, and so you're going to be exchanging and a very high leverage every day versus how let's say the US dollar is going against the euro dollar or against a different currency. And so what Forex does, it trades in pairs. So you have to have two different currencies going against each other. So I'm going to actually show you that. Okay, we're going to go here. Okay, so the base currency is always the front one. So the base one, or the currency you're buying, is when you start to trade that forex pair. So uh, a buy and a put. Let me put it like this: a buy is when you want to buy it, or and a put is when you want to sell it or trade it. So a buy is when you think the market's going to go up on the base currency and on the quote currency, or a put, or a put is when you think the entire pair is going to go down against each other. So a buy and a put: a buy if you think it's going to go up, a put if you think it's going to go down. Simple terms. And the great thing about Forex is it goes up and down. And like I said, it's highly volatile. So it goes up and down. You can catch it for a good wave where it's going up for at least maybe a couple hours, and then it'll come back down. Then it'll go back up. Then it'll come back down. And so in this video series, we're going to actually I try to show you some of the strategies that a lot of people take. I'll show you my strategy that helps me make money. Um, but it's not 100% thing. So something could be looking like it's going up, but then it's all of a sudden crashes for some reason. So it's not 100%. Uh, as in anything. Nothing's 100% as far as money. But the base currency is the one you're buying and when you want to trade, and then the quote currency is when you want to sell. So it always trades in pairs. Let me show you how that looks on the actual chart. Actual chart. So here you can see the euro is going against the dollar. For 15 minutes. Don't mind all this stuff right here. We'll get to that at a certain point. JPY, you got different charts here. This is the US dollar going against Canadian dollar and how that works. Okay, we're gonna pull that back down. Okay, and then you want to know what's so how you determine how much money you're gonna get is something called a pip. So pips are this motion. So if this goes up or down, this is called a pip right here. So the second one from the bottom, from the last. Second one from the last. These are all called pips, but this is one pip. Okay, you hear people say, I caught 100 pips today. So that means it actually went up to 100 up here. So it went up by 100. Okay, so if this goes down and you put a put or a sell in, you'll get your money. If it goes up, you'll lose money, or you'll lose the amount of money you put in. So say for instance you put in 200 bucks, uh, and you had it riding on a standard lot, and then you caught 20 pips. That means you got $200. Pip is pretty explanatory here. So that's pretty much it. And then you trade. Let's show you how that works. Okay. So these will be the pips. As you can see, I don't know if you guys can see this. Actually, hands up here. These are the pips that's going up and down. Right here. This is the pips. Up and down with those. Those are the pips. This is going. Like I said before, you can catch a wave that goes all the way up, and then come back down, and it goes all the way up. So there's different strategies, different markets. As you can see, this is the U.S. dollar versus the Canadian dollar, but the euro dollar is going down versus the American dollar or the USD. So it's going down, and that's in that market, but it's going up in this market, or it was going up in this market at pretty much the same time. Okay, so they stand. How you trade is standard lots. So what's a lot size? So it'll be, say you're putting $1 versus. Let me actually bring that up so you can actually see what it looks like. Okay, so how do you trade? Okay, we have something called lot sizes. So lot sizes is unit sizes and the value. So if I have a standard lot, which really a lot of people don't trade these, because a lot of brokers don't offer these because uh, the market is highly volatile, and you can either get a lot of money or you can lose a lot of money. A lot of people don't trade these standard lots, these volume lots. There's $10 per pip. The most I've seen is that will help you is the micro and the nano lot. Okay, so these mini lots and the standard lots, you'll see more of those in stock trading. Okay, in the stock market, you'll see these standard and mini lots on those types of charts, but these micro and nano lots is what people trade really on Forex. And how that works. Let's see, let's go here. I'll go here. See see how that lot is? That's my nano lot. If you go back here, that's a nano lot. Okay, because it got two values. So basically, it's not, well, no, it's not a nano lot. This is the actual micro lot. Okay. Um, so if I wanted to change it here and make this a full lot, come back here at my chart, and now you see that volume will be that. So at the beginning of my chart, I set it up for micro lots. So my volume, if I put it here, I'll actually be making a dollar per pip. So since I already got it set up on micro lots on my chart, and when you set up a chart, when you set up a brokerage or you set up with the broker, they're gonna ask you, do you want, if you want one of these, for the most part for Forex. But with the stocks, uh, E-Trade, anything, you can actually have all four of these. And there's some brokers that do offer some of those with the Forex, but they're not very, they're more of pop-up brokers where they'll take your money and they won't pay you out. So that's another thing we're going to get into, is how to find a correct broker. But since I already have it set up on micro lots, I would probably put a dollar volume in there, and it actually ended up being a dollar per pip. Okay, so you will put that there, and if you want to enter a trade, let's say here. So the volume here is at a nano lot right here. Now, if I could put it anywhere here, and since my chart is trading at a micro lot, it basically right here, it's kind of like almost a nickel or something like that. A nickel, maybe a nickel per lot. Okay, if that makes any sense. So since my chart is set up on this micro lot, which is 1 per 1,000, I got it at a nickel, so my pip count will be 5, a nickel per pip. And when you starting off, you want to have some of these smaller lots until you learn some of your formulas. Uh, Again, uh, all four of these can be traded, mostly on stock market ones, not on Forex one. Forex ones is usually micro and nano, and when you set it up, it kind of moves down. So if your micro is here, you'll get, instead of getting a dollar a pip, you'll get, you know 10 cents a pip, if that makes any sense. So this moves over and it becomes 10 cents a pip. Okay, so if I wanted to trade this, I will just put my volume in there, and then I will actually trade it. Okay. Okay. So if I wanted to actually enter the market, and I'll show you guys about take profits and stop losses on the next video. But when we start live trading, also that way you get an idea. But this is how mostly it's set up. You can actually go against some of the other ones if you want to go to the other charts. You can actually go here. Okay, the volume, stop loss. So that means you want to, before it hits all your money, you want to take it at a loss of, let's say you're losing by 10 pips. You don't want to keep the trade going. You'll put a stop loss in there or take profit. Okay, so that's basically it. Let's just review what we did today. So Forex versus stocks. Forex is the currency exchange of currency. It's got a lot of liquidity in there, and it's high leverage. Stocks is the company shares. Liquidity depends on the market and the company. Low leverage. Um, for stocks to actually work, if it's actually just like penny stocks or anything like that, then you will get very high leverage and high liquidity. But if it's something like, say, Apple or something, it's low liquidity and low leverage. Okay. What's the currency pair again? The basic pair will be your base pair will be at the front. Quote pair will be in the back. It doesn't matter as you can see, it was different charts, different pairs was doing different things versus the stock market and the Nasdaq market. If one's going up, one might be going up too. Just different. And then what's the pip again? The pip is just those little exchanges, those little numerals right here, and it's pretty much it. So in the next video, we're gonna talk about setting up charts, stop losses, and just more basic stuff. And then we're gonna actually start breaking down what's candlesticks and stuff in the next video. What's candles and what's candle patterns and what's different things like that. Click like, subscribe to the channel. We'll see you next time.